Today we're looking at a pretty cool trend-following tool called the FRAMA Channel, and this one's by BigBeluga. Basically, it uses a special kind of moving average to draw a dynamic channel around the price, helping you spot trends and even ranging markets. We're going to dive into what this indicator is all about and how you can combine it with another one for a neat little strategy. If you happen to find this video helpful, do me a favor and hit that like button, okay? Let's get into it. Now, to get this indicator on your screen, you'll first want to head over to TradingView. That's the platform I'm using here. If you're not signed up yet, no worries. There's a link down in the description you can use. Once you're on TradingView, load up whatever chart you like. Say Euro to USD on the 1 hour, doesn't matter. Then, click on the Indicators button up top and just type in FRAMA Channel. You're looking for the one by BigBeluga. Click on that and it'll pop right onto your chart. Alright folks, feast your eyes on the FRAMA Channel indicator by BigBeluga. This thing is pretty clever. It uses what's called a Fractal Adaptive Moving Average to draw this channel that adjusts itself based on how choppy or smooth the market is, helping you see trends and consolidation zones nice and clearly. So, what are we actually looking at here? Well, you've got this channel. It's made up of an upper band, a lower band, and kinda implicitly the FRAMA line in the middle, though you mostly interact with the bands. The cool part is how the channel and the candles change color. When the price breaks above the upper band, things turn green, suggesting an uptrend might be starting. If it breaks below the lower band, they turn blue, hinting at a downtrend. And if the price is just kinda chilling inside the channel, maybe just poking the bands but not really breaking out, the channel and candles turn gray. That's your signal for a ranging or low momentum market. You'll also see these little arrows pop up when a trend change is potentially happening, marking the spot where the price crossed a band. Let's peek under the hood for a sec and check out the settings. If you double-click the indicator, you'll see some options. You can tweak the length for the FRAMA calculation. Shorter makes it faster, longer makes it smoother. There's also bands distance to adjust how wide or tight the channel is. A really neat option is under signals data. You can choose if those arrows show the price level of the breakout or the average volume around that time, which could give you a clue about the strength of the move. And of course, you can change the colors for the up, down, and neutral states if you want. Oh, and to get those colored candles, you might just need to click on the indicator itself, on the chart panel. Sometimes that syncs the colors up if they don't appear automatically. For our strategy today, the default settings should work just fine, so let's click OK in the settings panel. Next, we're going to go over how we can use this indicator to trade. But before we do that, let's talk about SimpleFX, which is the Forex broker that I use for trading. It's fast, effective, and safe to trade with. Not only do they have a web and mobile application, but they also have a desktop application that you can download and trade with. They have no minimum deposit, and they made sure to use only the charts from TradingView across all their trading platforms. SimpleFX, as mentioned before, has a mobile application that allows you to trade wherever you are. They have over 1,000 tradable instruments, including Forex, commodities, indices, and equities. But what I love the most about SimpleFX is that they give you a first deposit bonus of up to $5,000 and a 10% cashback. To get access to the bonus and all the other perks, sign up to SimpleFX using the link in the video description. Alright, let's get back to it. Okay, so how can we actually trade with this FRAMA channel? Well, those green and blue signals look promising, but as we saw, sometimes you get signals when the market's just chopping around, leading to fakeouts. That gray channel is a good warning, but we can do better. We need a way to filter these signals and only take trades when there's a decent trend backing them up. So, let's add another indicator to help us out. Go back to Indicators and search for Andean Oscillator. This one's by Alex Grover. Add that to your chart. Now, this oscillator down here is great for confirming the trend direction. It has 3 lines, green, red, and orange. Basically, if the green line is above the orange line, it suggests an uptrend. If the red line is above the orange line, it suggests a downtrend. And crucially, if the orange line is on top of the other two, it means the market is likely flat or non-trending, exactly the time we want to ignore signals from the FRAMA channel. So here's the plan. We combine the two. For a bullish setup, we need 2 things. First, the FRAMA channel needs to give us a buy signal. That means the candles turn green, showing a break above the upper channel band. Second, We look down at the Andean Oscillator. We need to see the green line above the orange line, confirming the bullish trend. If both conditions are met, we can consider entering a long trade on the opening of the next candle after the signal. Let's look at an example for a long trade. See here, the candles were gray, indicating a range. Then, right on this candle, the price breaks above the upper band, and the candle turns green. That's our FRAMA signal. We immediately check the Andean Oscillator below. Yep, the green line is clearly above the orange line. Perfect. So we enter long at the open of the very next candle. We set our stop loss down here below this recent low point, and our take profit target is 1.5 times that distance. And look, this trade played out nicely. Okay, what about a bearish setup? It's basically the reverse. First, we need a sell signal from the FRAMA channel. The candles turn blue, indicating a cross below the lower channel band. Second, we check the Andean Oscillator. For a short trade, we need the red line to be above the orange line, confirming the bearish trend. Let's find a short example. Okay, over here, the market was ranging, see the gray candles. Then, this candle breaks below the lower band and turns blue. That's the FRAMA sell signal. We glance down at the Andean Oscillator, and sure enough, the red line is above the orange line. That confirms the bearish momentum. So, we enter short right at the open of this next candle. Our stop loss goes above this little swing high here, and we set our take profit at 1.5 R. Let's see. Yep, another winner based on our rules. Remember, if the FRAMA gives a signal, green or blue candles, but the Andean Oscillator shows the orange line on top, we just ignore that signal and wait for a better setup where both indicators agree. So, to wrap it up, the FRAMA Channel Indicator by BigBeluga is a really handy tool on its own for seeing trends and ranges using that adaptive channel and color-coded candles. But by pairing it up with the Andean Oscillator as a trend filter, we can potentially avoid some of those fake-out signals during choppy markets and focus on trades that align with the broader momentum, giving us a more refined approach. Now, remember, what I showed you here is not financial advice. This strategy is purely based on these two indicators and is mainly for educational purposes to show you how they could work together. It's definitely not a complete, guaranteed, profitable system on its own. You absolutely need to do your own homework, add your own analysis, maybe price action, support, resistance, fundamentals, whatever fits your style, and manage your risk properly before ever trading real money. Alright, that's the FRAMA channel and the Andean Oscillator combo for you. If you found value in this video and learned something new, please smash that like button. It really helps out. And hey, why not consider subscribing while you're at it, so you don't miss out on future videos. Thanks so much for watching, and I'll catch you in the next one.